Welcome to the ProfitMaxx software tutorials. This tutorial series will help you better understand the setup of your ProfitMaxx software and let your service department realize the benefits of proper technician management much quicker. Let's get started.
Welcome to the tutorial for the Managed Future Revenue Report. The Managed Future Revenue Report is a summary of the other managed performance reports that were covered in this tutorial CD. I'll make reference to some of these other reports as I go through this one. If you need a refresher on what those reports included, return to the opening page and review the tutorials for those specific reports. Keep in mind that when you're looking at any of the reports in ProfitMaxx, you can press the F1 key on your keyboard for detailed context-sensitive information on each section of this report. The Managed Future Revenue Growth Report is looking at the 6 areas that you stand to gain the most within your company. This report is broken down into 3 sections. The first gives you the overall performance indicators and what the improvement would be if the tech met your expectations. The Managed Performance Revenue Growth section shows you the improvements you could realize by better managing the tech's actual performance while he is performing service and maintenance work. The Managed ProfitSmart Revenue Growth section shows you the improvements you could realize by better managing and training your technicians in ProfitSmart activities. First, let's look at the overall performance section on top. We're going to start out by looking at Bruce Dern's performance numbers. The technician's name can be found in the upper left-hand corner of each report. The first number shown is the performance indicator overall hours. This is the cost per dollar of revenue produced by a technician that the tech costs you at their fully loaded rate from setup. In other words, what is his fully loaded wages costing us out of every revenue dollar that he generates? Since the goal for profitability is that labor costs no more than 25% of gross sales, the target here is 25%, or 25. The lower, the better. This is a very key number that must be managed to. The high teens is a very achievable number and has been proven again and again over time when technicians are managed to the expectations in the performance management report. Bruce was at a performance indicator of 45. In other words, his labor is costing us 45 cents out of every revenue dollar that he's generating. The second value is the managed labor to sales. This is what Bruce's performance indicator overall hours would be had he hit all the minimum goals and expectations in the managed performance reports. If this number is over 25, you may need to re-examine your goal sets and setup, look at your pricing, billing efficiency, high amounts of time being transferred to other departments, or some other item that could be impacting his overall profitability. Bruce is at 25.45, just over our target. In this particular case, if I went to one of the other detail reports, I would find that Bruce had over 60 hours of transfer time to other departments. His time is transferred and his goals are reduced accordingly. But as reality hits, his fully loaded wages are still the responsibility of the service department. This being the case, even with the tremendous amount of transfer time Bruce spent in other departments, he still could have come very close to hitting our goals. Imagine what he could have done if we had kept him in the service department. Third is the managed performance profitability increase. This is the difference between the first 2 numbers and shows the percentage of potential increased revenues to the company if the technician is managed to the goals and expectations in the managed performance reports. Bruce has a potential of increasing by 19.55%. Next, let's look at the Managed Performance Revenue Growth section of this report. Remember, this section shows you the improvements you could realize by better managing the tech's actual performance while he's performing service and maintenance work. First is the billing performance. This is a technician's bottom line potential revenue increase from the Billing Performance Analysis Report. The first column shows you the increases possible for the time period of this report. In this particular case, we're running for the month of July. For Bruce, his potential increases are $432. The annualized column extrapolates the number from this particular reporting period, for us the month of July, to show the impact over a full 12 months. For Bruce, this totals $5,096. Next, the travel performance. This is Bruce's bottom line potential revenue increase from the travel performance analysis report. For this month, Bruce's potential increase is 0. He met or exceeded our expectations in this category. This being the case, the annualized increase is also 0. Unbillable time is Bruce's bottom line potential revenue increase from the unbillable time analysis report. For Bruce, this totals $1,568. Over the course of a year, this totals $18,469. Maintenance performance is Bruce's bottom line potential revenue increase from the maintenance performance analysis report. Bruce could have potential increases of $209. Over the course of a year, this totals an additional $2,471. The managed performance improvement revenue is the total potential improvement revenue from all of the managed performance revenue growth reports. If Bruce had performed up to our expectations, he could have seen total increases of $2,210 for this month alone, and a total of $26,027 for the full year. The numbers start to add up. Next, let's take a look at the Managed ProfitSmart revenue growth section of this report. Remember, this section shows you the improvements you could realize as a company by better managing and training your technicians in ProfitSmart activities. Managed sales lead revenue is the potential revenue increase to the company from retrofit sales if the technician performed to the goals and expectations from the Managed Sales Lead Revenue Report. Had Bruce done a better job of looking for sales leads, our company could have brought in an extra $17,994 in new retrofit sales. Over the course of a year, this would total $211,864 in new business. ProfitSmart activities are crucial to your company. The Managed Maintenance Agreement revenue is the potential Managed Maintenance Agreement revenue increase had the technician performed to the goals and expectations of maintenance agreements sold, and this comes from the Managed Maintenance Customer Growth Report. Bruce did pretty well when it came to selling maintenance agreements. We only had a potential increase of $41.58 for the month. Over the course of a year, this comes out to $489. Future maintenance repair revenue is the potential revenue increase to the company from repairs and accessories sold on maintenance service calls had the technician performed to the goals and expectations of the maintenance agreement sold. This is also from the Managed Maintenance Customer Growth Report. Since Bruce did well selling maintenance agreements, this number will also be low. He would only recognize an additional increase here of $12.60 for the month and $148.35 for the year. Lifetime customer revenue is the potential revenue increase to the company from having a customer for life if the technician had performed to the goals and expectations of maintenance agreements sold from the the Managed Maintenance Customer Growth Report. In Bruce's case, this totals $6,300 for the month. Over the course of the year, this totals $74,177. Now, last in this section is the ProfitSmart improvement revenue. This is the total potential improvement revenue from all ProfitSmart areas had the technician performed to the goals and expectations in the ProfitSmart activities areas. For Bruce, this total is $24,294 for this month alone and $286,042 for the year. Now, I do have to point out one thing in this section. The Managed Maintenance Agreement revenue and the future maintenance revenue are shown in this section for your information only and are the immediate impact for the reporting period. They are not included in the Managed ProfitSmart improvement revenue because they're accounted for in the lifetime customer revenue figure. If we added them in here, they'd be counted twice. This brings us to the total managed improvement revenue. This is the total of the performance revenue growth section and the ProfitSmart revenue growth section. This is the overall potential performance revenue increases we could have seen by managing Bruce to our goals and expectations. For this 1 month alone, our company could have realized an extra $26,504 in revenue. Over the course of a year, without any changes, this will cost our company, in potential revenue, a total of $312,070 just for Bruce Dern alone. Next, let's switch over to our second technician. This technician is Bryant. Bryant, we can see his name in the upper left-hand corner of this report. Bryant's performance indicator for all over our overall hours is 22. In other words, 22%. His revenue is costing us 22 cents out of every revenue dollar that he's bringing in. Had Bryant met all of our goals and expectations, our managed performance labor to sales ratio would have been as low as 13.71. Again, a significant increase. That's an increase of 8.29%. Now let's take a look at the managed performance revenue growth section on Bryant's report. For billing performance, again, remember this is for the month of July is our reporting period. The improvement revenue is $2,598. Over the course of a year, that's going to total up to $30,596. For travel performance, increases could be, or improvements could be, a total of $1,287 for the month, totaling up to $15,161 for the year. Unbillable time improvements total up to $1,082, again over the course of a year. That's a total of $12,739. And for maintenance performance, the improvements are $1,108 over the course of a year. That totals out to $13,054. So the managed performance improvement revenue for this month alone, just for Bryant was $6,076. Over the course of a year, that totals out to $71,551. Now let's take a look at the managed ProfitSmart revenue growth potential. For managed sales lead revenue, our improvements total out to $7,367. Over the course of a year for Bryant, that totals out to $86,740 in improvements. The managed maintenance agreement revenue totaled out at $47.52. Again, not a huge number here. Over the course of a year, that comes out to $559. For future repair revenue, maintenance repair revenue, that comes out to $14.40 a month, totaling out at $169 a year. Again, not huge numbers there. But the lifetime customer revenue comes out to $7,200 for this month, and a total for the year of $84,774 for Bryant. That puts our managed ProfitSmart improvement revenue for Bryant at $14,567 for this month, and over the course of a year puts it to $171,514. Our total managed improvement revenue for both areas, the managed performance and the managed ProfitSmart growth, for this month alone for Bryant is $20,643, and over the course of a year, that's going to total out to $243,065. Again, some serious numbers here. Next, we'll take a look at Rob Roy's performance. Again, we can find Rob Roy's name in the upper left-hand corner of this report. His performance indicator was 26. Again, a little bit higher than we're looking for. Again, our target is 25. Had we managed him to all of our goals and expectations, he could have been as low as 18.4. That's an increase of 7.6%. In the managed performance revenue section, for billing performance, his overall improvements were $2,444 for the month, $28,778 for the year. In travel performance, if we managed him better, we'd see improvements of $600. That totals up to $7,067 for the year. In unbillable time, the improvement would be $1,368. For the year, that totals out to $16,114. And for managed performance, $517 for the month and $6,096 for the year. So our total managed performance improvement revenue for Rob Roy was $4,930 for the month and $58,056 for the year. Again, $10,000 here, $10,000 there, and pretty soon we're talking about some real profitability, aren't we? Next, in the ProfitSmart revenue growth section, for Rob Roy, again, the managed sales lead revenue is $19,862. Over the course of a year, that totals out to $233,859. Rob met or exceeded our expectations for the managed maintenance agreement revenue, so there's no improvements there, either monthly or annually. The same thing on the future maintenance repair revenue. He exceeded our expectations, so no improvements there. And for lifetime customer support revenue, again, he exceeded our expectations, so no improvements there. That puts the managed ProfitSmart improvement revenue for Rob Roy at $19,862 for the month and $233,859 for the year. His total managed improvement revenue for the month, $24,792, and for the year, $291,915. Now, lastly, let's take a look at Shawn Kemp, our final technician. Again, his overall performance indicator overall hours is 27. Again, a little bit higher than our target of 25. We've got a little bit of work to do here. If he was managed properly and met our goals and expectations, he could be as low as 20.29. That's an improvement of 6.71%. Again, we have a little bit of work to do here. In the managed performance revenue growth section, billing performance improvement of $918 for the month, $10,818 for the year. Travel performance, he's traveling pretty well. He exceeded our expectations, so there is no improvements there either monthly or annually. On billable time, we could see improvements of $1,688 for the month, totaling $19,877 for the year. In the maintenance performance section, $4.11 for the month, $48 for the year. That puts our total managed performance improvement revenue for Shawn Kemp at $2,611 for this month and at $30,744 for the year. Now, if we take a look at Shawn's managed ProfitSmart revenue numbers, we wind up with managed sales lead revenue of $1,757 in improvements. Over the course of a year, that totals out to $20,687. The managed maintenance agreement revenue at $106.92, and for the year that totals out to $1,258. Future maintenance revenue, repair revenue, $32, and over the course of a year, $381. And lastly, the lifetime customer revenue of $16,200. So we could see annual improvements there for Shawn Kemp of $190,741. That puts Shawn's managed ProfitSmart improvement revenue at $17,957 and his annual performance improvements at $211,000. His total managed improvement revenue altogether for the month is $20,568. Over the course of a year, that totals up to $242,174. Again, we're talking about some serious money here. Now, the team page displays each technician's name individually and their total managed improvement revenue from the reports that we just covered. It also shows our entire team's total managed improvement revenue combined. For our team, we had had we managed our technicians to our goals and expectations, we could have realized an additional revenue of $92,509. That's for this month. Over the course of a year, this total, get this, $1,089,225. This number may seem high, but it's very real. What could your company do with an extra $1 million in revenue? It's absolutely crucial to the life and profitability of your company that you focus on these numbers. If you're a working manager, that is, you spend much of your time in the field doing service work, you may want to take a real hard, close look at your numbers. What can you do to have the work that you're doing handled by another technician? It's in your best interest to spend your time, money, and energy teaching your technicians about ProfitSmart activities and managing them to your performance numbers. Doing so will bring in far more revenue and profits to your company, your entire company, than the money that you're bringing in performing service. Make sure while you're reviewing these analysis reports that you work on the areas that can have the greatest impact. Pick the low-hanging fruit first. As you do this, however, make sure that you're looking at the big picture. Once your techs are comfortable with the routine and are trained in looking for sales lead opportunities and maintenance agreement opportunities, watch these numbers. You'll find that your installation department will start to get busy as well. You'll need to plan for this and have that department trained and up to speed. You'll also need to think about your sales team. Will they be ready for the sales leads that are coming in? The next thing you'll have to watch is how to handle the heavy demand times. When conditions are such that the phone is ringing off the hook for demand service, what will you do? It'll be tempting to increase the number of calls the techs each take in a day to get them all in. And I promise you, when you do that, they'll stop looking for sales and maintenance opportunities. Yeah, you'll bring in a little extra in demand service, but watch what will happen to the pace of your installation department. If you throw more calls at your technicians than they can comfortably and profitably handle in a day, your retrofit business will suffer as a result. The techs will be focused on getting the call done so they can get on to the next call because they know that there's a whole lineup of calls left to come for the day. Resist this temptation. It will happen, and you will see a negative impact. Make the correction immediately. Preserve all the work that you've put into creating the most profitable service department and company that you've ever owned. Now, hopefully, these tutorials have given you a better understanding of the Managed Performance Analysis reports. Keep in mind that you can replay this tutorial anytime you need to remind yourself of this information. You can also press the F1 key on your keyboard to get detailed, context-sensitive information while looking at any of the reports in ProfitMaxx. This will end this tutorial. Select the next tutorial you wish to view. Thank you, and have a profitable day.